With so much drama. Now, there are reports this morning, and this just broke a few minutes ago, that Silicon Valley has now failed in their attempt to raise over $2.25 billion to shore up their balance sheet and deposits.
I'm sorry, I meant to reiterate. Please get that off the screen. SVB Financial Group at $106.04 a share. That's wrong. Okay, I'm sorry. Keep going, please.
So I think we're down about 60% just in the opening minutes. But look, there's talk that SVB is now trying to sell itself off. You've heard of major, and we're talking about gold-branded multi-billion-dollar venture capital firms in Silicon Valley, like Peter Thiel's Founders Fund, Co2, Union Square, Y Combinator, Tribe Capital, some of that I've reached out to overnight as well. And they've been telling some of their startups, and they themselves have either been pulling money or capping the amount of deposits that they're holding at Silicon Valley Bank. Now, at its peak, it was the 15th largest lender in America. So we're not talking about Goldman Sachs. We're not talking about JP Morgan, but it was vital to Silicon Valley, saying that it does do almost 50% of all venture capital backed business with back tech and startups, healthcare startups. So we're trading off the lowest levels since 2016, worst day yesterday since 1993. I want to bring your attention to Bill Ackman, billionaire investor, tweeting that he thinks if private capital can't provide a solution, and right now indications are they have failed in that capital raise, a highly dilutive government-preferred bailout should be considered. Now, Silicon Valley Bank yesterday said they had $180 billion in assets to cover $160 billion in deposits. Obviously, that money is disappearing quite quickly with companies taking out their cash just in case. Now, Silicon Valley Bank, if you're asking how they got into this position, is because they made some really terrible bets on U.S. Treasuries, buying $21 billion worth of Treasuries when the yields were only at 1.7%. So now we're at 4%, and you can imagine those Treasuries are worth a whole lot less now. So they had to sell that portfolio at a loss of $1.8 billion, and that's why they're desperate to raise cash in this environment.
The big banks, some of them were slammed yesterday, and I see
most of them
going
lost
down.
$52 billion in market cap yesterday.
But they're going down a little bit more today.
Yeah, that's right. So bank stocks had their worst day in 2 years since COVID, 2020, because of fears of contagion. And there's discussion right now in the markets about who is going to buy SVB if they have now hired advisors to sell themselves off, right? You also had some more negative headlines in the banking space, not just SVB, but think about Silvergate that I told you about yesterday, the crypto lender that unwound itself or closed down shop. Credit Suisse delayed annual reporting on accounting issues. And so I think there's just a lot of fears with now interest rates all of a sudden at 5%. And that is the steepest rise that we've seen in interest rates since the 1980s.